today's report, the 25th of July 2025. Right, okay, here's the disclaimer. And the news events. Right, today I want to talk about the progress of US tariff negotiations by partners of the US. So, quick introduction. The United States has been actively renegotiating trade terms with its key global partners throughout 2025, aiming to reshape the international trade landscape through a new wave of tariffs. Here's the update on the progress as we get nearer to the August 1st, 2025 deadline, right? So for Japan, a new framework was unveiled July 2022, lowering threatened US tariffs on Japanese imports from 25% to 15%. It includes provision for Japan to invest $550 billion in the US and open its market to American cars and rice. Now, Japan's auto exports have benefited immediately, and both sides view it as mutually beneficial. Uncertainties remain on specific sector exemptions. Both markets react positively, with the US stock and Tokyo's Nikkei rallying sharply. Now, for the European Union, as of July 23rd, the US and European Union are closing in on a trade deal based on a 15% tariff on most EU imports, mirroring Japan terms. Now, exemptions have been carved out for aircraft, spirits, and medical devices. The European Union is preparing up to Euro 93 billion in retaliatory tariffs should talks collapse, but momentum for compromise remains high. Next is China. A 90-day pause on most tariffs set to expire August 12th is expected to be extended via a Stockholm meeting between Treasury Secretary Bessent and Chinese counterparts. Now, these are the three main trading partners, that it's viewed, as crucial for the US to get through. Now, the remainder, I put it under the summary, okay? But before that, the US and China will also discuss export controls and reducing Chinese exports-driven manufacturing. Without a new agreement, tariffs could revert to as high as 145% for the US and 125% for China. Now, here's the like I said just now, the summary of other major trade partners, right? Now, the UK, they have already agreed to a framework with a 10% US tariff, with ongoing negotiations continuing to broaden the agreement. For Canada, talk remains unresolved ahead of August deadline. If no deal, Canada faces a 35% US tariff on non-USMCA goods. Canada is bracing but prefers a good deal, not a fast deal. As for Mexico, face a looming 30% tariff on August the 1st. As such, Mexico is actively negotiating and cooperating on broader issues to avoid escalation. For South Korea, urgently working to secure relief from a pending 25% tariff, seeking parity with Japan's 15% deal. Talks are ongoing, deadline driven. For India, long-standing talks on an interim deal to avert a 26% tariff. However, agriculture and steel or dairy issues remain unresolved. No formal August 1st letter issued, and both sides appear reluctant to trigger escalations. For Southeast Asia, Philippines and Indonesia secured 19% tariffs, Vietnam at 20% with punitive provisions for transshipment. Others like Thailand, Malaysia still negotiating, facing 25 to 36% threats if unresolved. Finally, for Brazil, no deal in place and faces a 50% tariff starting August the 1st. Brazilian leaders have not engaged in serious negotiations, raising the likelihood tariffs will go ahead. Now, how's that going to affect the stock market? So here's the S&P 500 in the second half of 2025, the outlook. Now, the SP 500 has shown notable resilience in 2025, rebounding strongly from the tariff-driven Liberation Day sell-off in April. Now, investors' sentiment turned more optimistic following the finalized trade agreement with Japan and signs of constructive negotiations with the European Union and China. Now, as of late July, the index reached new record highs supported by reduced uncertainty around trade policy. Volatility has eased with the CBOE volatility index falling to its lowest levels in 5 months, suggesting that markets are pricing in a controlled rather than chaotic outcome to trade disputes. Now, the current trajectory is anchoring global tariffs at a baseline 15% offers predictability for business. Now, the clarity has boosted investors' confidence, particularly in sectors like industrials, agriculture, and autos, which stand to benefit from reduced trade frictions and improved export conditions. At the same time, companies reliant on imported components continue to face elevated costs, and firms like GM have already reported significant earnings hit linked to tariffs, right? Now, looking ahead, the S&P 500's path will largely depend on how remaining negotiations unfold in the coming weeks. Several scenarios are possible. Scenario 1, broad agreement achieved, which is bullish. If the US finalizes trade deals with the EU and China before their respective deadlines, and also reaches functional compromise with Canada, Mexico, and South Korea, market sentiments would likely remain strong. Under this outcome, the S&P 500 could continue its upward trend driven by improved earnings visibility, rising capital expenditures, and easing supply chain pressures. Tech and consumer sectors could benefit the most from stabilized global conditions. Now, scenario 2, partial success, isolated flashpoints. This is more or less neutral. If deals are reached with most major partners but talks with one or two countries such as Brazil or India fall apart, the overall market could stay relatively stable, but with volatility in affected sectors. For instance, industrials or material stocks might struggle if high tariffs remain on steel or agricultural exports. The S&P 500 could see modest gains but would likely trade within a range, awaiting more clarity. Now, scenario 3, which is the final scenario, major negotiations failures, which is bearish. If negotiations with the EU and China collapse, or if new tariffs on Canada and Mexico take effect without resolution, the market could quickly retrace recent gains. A broad sell-off would be likely, especially in manufacturing, auto, and semiconductor stocks. Investors' confidence would weaken, volatility would spike, and the S&P 500 could fall back to pre-summer levels. In all scenarios, tariffs are expected to remain higher than pre-2025 norms. Even in the most optimistic case, the cost of doing business for many firms will stay elevated, and this may cap the upside potential for corporate margins and equity valuations. Nevertheless, the shift from uncertainty to defined trade frameworks is helping investors and companies plan ahead. Definitely an improvement over the chaotic backdrop earlier in the year. Now, overall, the S&P 500 enters the final stretch of 2025 with cautious optimism. Continued progress in trade talks could support the market's current momentum, but any unexpected breakdown, especially involving major partners, could still trigger sharp reactions. Investors will be watching August outcomes closely to determine whether the rally is sustainable or fragile. Okay? So with that, that's the report for today.